Welcome back. The UAE's financial markets are closed today. Trading will resume on Sunday. So let's now take a look at the various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. Looking at business news abroad, world finance leaders gathered in Washington to work on a plan to make the global economy less prone to the booms and busts of recent years. Central bankers and ministers from the Group of 20 advanced, and emerging economies face a number of hurdles, including high commodity prices, surging food costs, debt levels, the impact of Japan's earthquake and tsunami, and the tensions in the Middle East. But targeting reforms in the world's financial system is a top G20 priority.
But you can start to set guidelines or help countries think about how they can contribute to rebalancing the global economy, let's say in a 5-year time horizon. I think that's realistic, but it is difficult. It's very difficult because, let's take China, for example. A lot of powerful Chinese companies are relying on exports. They don't want to give that up. So it's going to be tough, for example, to get them around. In the U.S., it's a little different. It has to do more with cutting domestic spending, cutting entitlement programs, maybe raising taxes. Tough political battles ahead for everybody.
On Friday, the G20 agreed on a plan for identifying countries that would put the global economy most at risk. The group accounts for 85% of the world's output. These new guidelines will likely need some fine-tuning before they can be endorsed at the next meeting in fall. Sky-high inflation is hitting China's working class the hardest. With prices at a 32-month peak, the country's low-wage workers are struggling to manage a spike in food and consumer prices. Wages for many workers remain unchanged. In an effort to counter growing inflation pressures, the government has raised interest rates twice this year and has offered subsidies to poorer consumers. China's GDP increased by 9.7% in the first quarter from a year earlier, down from 9.8% in the final 3 months of 2010. Consumer price inflation sped to 5.4% in the year to March, the fastest since July 2008, and topping market forecasts for a 5.2% increase. The statistics show that the world's second-largest economy is still growing near double digits, but the push for the government to continue tightening monetary policy still remains.
So we're now living through the consequences of being behind the curve on policy. Prices are going up. We now have tight monetary policy, but as we know, inflation is a lagging phenomenon. So we're living through the inflation. It's very hard to stop now. So costs are going up, companies are trying to raise their prices, and the government is trying to both tighten monetary policy but also quietly persuade and guide companies not to raise their retail prices.
Greece's austerity measures have been highly unpopular with its citizens, leading to strikes and protests. Now the Greek Prime Minister has unveiled a fresh set of fiscal measures to tackle the deficit. Papandreou says he will specify what the reforms are after Easter. He had been expected to announce sell-offs, benefit cuts and more tax increases as Athens looks to save around 23 billion euros and meet the conditions of its EU and IMF bailout. Japan's nuclear plant operator TEPCO is offering crisis-hit families provisional compensation of more than $10,000 each. Apologising to the people of Fukushima, TEPCO President Shimizu says he is deeply sorry for the catastrophic accident. He says the early compensation will be paid to some 50,000 households within a 30-kilometre radius of the nuclear plant, with the amount totalling around $600 million. Before the disaster, more than 200,000 people lived within a 30-kilometre range of the nuclear plant. They have since been either evacuated from the area or forced to stay indoors. After the break, we take a look at the day's sports news, so stay with us.